Hey there, TRASTRA fans. It's been a couple of weeks since the last time we discussed current events in the Cryptoverse, and boy, do we have a pile of stuff to go through. We left things when Bitcoin was 53 and some change in February on the 19th, I think. Since then, it's up to 63 this morning. That's a 25% jump that, in my humble view, has very little to do with the upcoming halving event or the spot Bitcoin ETFs gold rush, and everything to do with Tethers and Circle's printing press. Let me know in the comments below if you want me to produce an explainer video of what I mean. The short version would be that stablecoin issuers have minted almost $8 billion in assets over the last couple of months, issuing loans in USDT or USDC to their partners, which would allow those market makers to further collateralize their positions, thereby sending the Cryptoverse to the moon. But be it all as it may, the golden rule stands. Greed is bad. Volatility is good. So put away the Kool-Aid and keep your wallets handy for the time this roller coaster will begin its downswing, because leverage in the space is so high that the potential for a nasty correction is very real. And again, if you want to make money in crypto, trade, make gains, and cash out. TRASTRA can help you out with that. Don't hodl. You're no sailor. You can't afford to hodl. Grow a set of balls. Tell your little boy or girl that college is going to have to wait for a while, and trade your asses off. So again, what I'm saying is that there's much money to be made as we hold our breath, hoping for the eclipse of the all-time high of 68.9 actually, before the halving event cuts the miner's reward in half. We're looking at crazy volatility the next couple of months. Take advantage of it. Just think about it. US spot Bitcoin ETFs are swimming in cash, setting records left and right with net inflows and trading volumes that make Wall Street look like a lemonade stand. But on the other hand, JP Morgan comes out and tells us to expect a tumble to 42. I should say back down to 42 past halving, when the network's hash rate drops 20% and only the leanest miners remain standing. We'll definitely be talking about all this in the upcoming Newsreel episodes. It's incredibly exciting. In the meantime, here's what's happening in the Cryptoverse right now. The European Union Council has officially embraced new regulations to enable instant euro currency payments available 24/7, aiming to boost European payment companies in competition with giants like Visa and MasterCard. This initiative facilitates immediate euro transfers within seconds, even outside regular business hours, across the European Union member states. Previously, card and deposit transactions could extend over several business days. By incorporating countries outside the Eurozone, the EU seeks to diminish its financial sector's dependency on third country institutions, marking a significant step towards enhancing the bloc's financial autonomy. This move is part of broader efforts to diversify the payments market traditionally dominated by US banks that now are facing competition from innovative fintech companies, wink wink TRASTRA, utilizing banking data for rival services. GEMINI, led by the WINKLEVOSS brothers, has agreed to repay $1.1 billion to customers following a settlement with New York's Department of Financial Services, NYDFS, over its EARN program. Launched in 2021, the scheme allowed users to earn interest through loans to Genesis Global Capital. However, NYDFS found GEMINI failed to properly vet and monitor Genesis, leading to significant customer losses when Genesis defaulted and declared bankruptcy. This failure resulted in about 200,000 users being unable to access their funds, now worth about $1.8 billion. Alongside reimbursing users, GEMINI will pay $37 million fine to NYDFS. The company announced plans to return 97% of assets within 2 months, with the rest over the following year. Amidst these reparations, GEMINI faces a lawsuit from New York Attorney General Letitia James, accusing it and related entities of misleading investors and hiding over $1 billion in losses, now estimated at $3 billion. Nigeria has slapped Binance with a demand for at least $10 billion in damages. This demand stems from accusations that Binance engaged in illegal transactions that allegedly profited at the expense of the country, particularly amidst the crackdown on the exchange and devaluation of Nigeria's currency. The Nigerian government's actions include an ongoing investigation coordinated by the Office of the National Security Advisor, involving multiple law enforcement and security agencies. Additionally, Binance executives were detained by Nigerian authorities earlier last week. further escalating tensions. Binance has since removed Nigeria's currency, the naira, from its peer-to-peer service, indicating the growing complexities of operating within the country's regulatory environment. More bad news for Binance. Survivors and relatives of the victims from the October 7th Hamas attack on Israel have filed a lawsuit against Binance in the U.S. Middle District Court of Alabama. The lawsuit alleges that Binance facilitated Hamas's fundraising efforts, contributing to an attack that resulted in over 1,200 deaths, more than 6,900 injuries, and 239 kidnappings. The National Jewish Advocacy Center, representing the plaintiff, highlights Binance's role in these transactions, emphasizing the necessity of sufficient funding for such an attack. This lawsuit follows Binance's recent settlement of $4.3 billion for violations including failing to prevent money laundering and violating U.S. sanctions, particularly in transactions involving Iran. The lawsuit seeks unspecified damages, drawing attention to Binance's alleged indirect support of terrorist activities through its platform. Hong Kong has attracted applications from 24 companies seeking to operate digital asset exchanges in the city. Among these industry leaders like Bybit, OKX, and Crypto.com, they stand out, indicating strong interest in HK's regulatory framework. The deadline set for these applications was February 29th, with a mandate that non-applicants cease operations by May's end. Surprisingly, major players like Binance, Coinbase, and Kraken are missing from the applicant list, raising eyebrows and prompting discussions about Hong Kong's appeal as a crypto center. But this move is still part of Hong Kong's broader strategy to establish itself as a tech-forward financial hub, despite the high compliance costs implied by its 9-month-old virtual asset regulation emphasizing investor protection. The city, which saw an estimated $64 billion in crypto transactions, mainly through over-the-counter trades up to June, according to Chainalysis, now waits to see how these new entrants will commit and adapt to its evolving regulatory landscape. We're going to watch that as well. And speaking of Kraken, the company has unveiled a new institutional arm aimed at capturing the growing interest in Bitcoin ETFs following the U.S. approval of spot Bitcoin ETFs. This new division integrates Kraken's existing institutional services, targeting asset managers, hedge funds, and high net worth individuals. With the launch of 9 Bitcoin ETFs that have attracted $6 billion in inflows since January, Kraken is positioning itself against competitors like Coinbase Institutional and Binance Institutional. Tim Ogilvy, head of Kraken Institutional, highlights the rapid institutional adoption of crypto spurred by the recent ETF approvals. Kraken also plans to offer a qualified custody service, leveraging its status as a Wyoming charter special purpose depository institution. Everybody's after the U.S. market. Everybody wants the U.S. dollars. Wow. And there's even more news on Kraken. 8 U.S. state attorneys general challenged the Security and Exchange Commission lawsuit against Kraken, claiming it exceeds the regulator's authority in a joint amicus brief filed on Thursday. The attorneys general represent Montana, Arkansas, Iowa, Mississippi, Nebraska, Ohio, South Dakota, and Texas. They claim that the brief does not support either party, but it opposes the SEC's regulation of crypto assets absent and investment contracts because Congress has not delegated this authority to the SEC, end quote. If you recall, the SEC sued Kraken in November, charging the exchange with several offenses, including operating without registration, failing to prevent known conflicts of interest, and commingling client funds. The same charge that was filed against Binance. Not much of a crypto news, but still, I think it's fascinating. Elon Musk has initiated legal action against OpenAI and its CEO, Sam Altman, alleging a departure from their original nonprofit mission. The lawsuit centers on accusations that OpenAI, which Musk helped found and initially invested in, has shifted towards profit-making, particularly by limiting access to its technology. Musk's grievances also highlight OpenAI's partnership with Microsoft, which has made substantial investment into OpenAI. Musk is demanding that OpenAI revert to its open-source model and seeks to prevent Microsoft from profiting from the technology. Hong Kong-based crypto exchange Bitforex is facing a crisis after halting withdrawals and users reporting issues accessing their accounts. The exchange reportedly stopped processing transactions on February 23rd, following the withdrawal of a staggering $56 million in cryptocurrencies from its wallets. Bitforex remains tight-lipped, failing to respond to user concerns, and their website is partially down. This comes just months after Bitforex was identified as a leading global exchange in September 2023. The sudden halt and lack of communication have fueled speculation and worry within the crypto community, especially considering Bitforex's previous brush with regulatory scrutiny from Japan's Financial Services Agency. Wow, fool me once. And finally, Telegram. Remember, Telegram is where the TRASTRA community is, and I urge you to become a member as soon as possible if you haven't already. So Telegram has introduced a new revenue sharing model promising channel owners 50% of ad revenue in Toncoin. This announcement made by founder Pavel Durov led to a 31% surge in Ton's price, marking its highest level since February 2022. Initially launched in 2018, the Telegram Open Network faced regulatory challenges leading to Telegram's withdrawal in 2020. From the crypto space, that is. However, they stopped the launch in 2020. Let me know in the comments if you want me to produce a video. It's actually a fascinating topic how Telegram wanted to issue its token and got shot down in 2020. So anyway, the blockchain has thrived under community developers supporting various projects, including Notcoin or Toncoin. Well, yeah, also an interesting topic. With Telegram channels accumulating 1 trillion views monthly, this move could significantly impact the Ton ecosystem, and yeah, that is an interesting development. We're going to be totally watching that in the weeks to come. In the meantime, thank you so much for watching episode 101, 101st episode of our TRASTRA Newsreel. Please sign up to our YouTube, sign up to our TikTok, and become a member of our Telegram community. With that, again, thanks for watching, and I will see you in the next video. Peace.